Well, good morning and welcome back to the YouTube channel of Older Bloke Crypto. On February the 27th, 2024, about an hour and a half after the close, and what an eventful 24 hours, even 3 days we've had in crypto. And as I say here on the splash screen, we've avoided the bear trap that I talked about extensively last week. We took profits, as you can see. There's 3 nice take profit trades here, and there is a new range forming for us to trade. So let's get stuck into it. Now, without blowing my own trumpet, I just want to replay the video, a short piece of the video that I made on the 23rd of February for your reference. And hopefully this has not only saved people a lot of money, but made people a lot of money by paying attention to it. Here we go. Welcome back to the YouTube channel of Old Bloke Crypto on February 23rd, 2024. Now, as I've said on Twitter today, it's a very important day for trading and for retail traders to really learn one of the major traps that the market makers put in place to take your liquidity. So I want you to pay careful attention to what I'm going to tell you today so that you don't get caught now or in the future. Because one of the things about the market makers is that, yes, they've got all the resources in the world, the talent, the algorithms, the computing power, etc. What they don't have is variety, and that's your advantage, is that. All right, so as I was saying there was a bear trap that was set there on the liquidity charts. You can see it clearly, and I'll just show you that on Twitter. And there was that very heat map there. And as I said to you, the trap was that they left liquidity behind. So what they were trying to do is induce people to place more shorts, saying, oh, this is the top of the range, I'll put more shorts in now, and then revisit that price and take out those $120 million plus worth of shorts. And I said to you, that was likely to happen. Please don't place a short. And guess what happened? Price went down as a fake out, essentially, to say, oh, look, yes, it's moving away, going to the downside, and they're encouraging more and more shorts to go and place their positions up here. Yes, here we go. So there was a little $21 million liquidity pool sitting down there at $29.83. So the market maker had their little snack, and then guess what happened? The market maker kept price in a very tight range for a period of time around that 50 EMA, 21 EMA, I should say, and encouraging people to place even more shorts, saying, oh, okay, this is going to cap the price. Price is going to continue on down to the downside. So more and more shorts come in. And what happens next? And as I said, I won't be surprised if that level of 30.50 gets taken out over the weekend. We shall see, and we sure did. And not only did we get that, but fortunately I was able to take 2 bites of that cherry. And as I said, that liquidation band at 30.50 just got hit. You could see it coming. So as I said, next time you see a big band of liquidity only half taken before price reverses, remember, just like Jack Nicholson in The Shining, if there's any people old enough to remember that they're listening to this video, he'll be back, and certainly was. So hopefully you profited from it like I did. And so then, of course, we've had the market continue to move on. And yet what was amazing to me is that despite tens, if not hundreds of millions of shorts getting taken out, they kept coming back for more. And so there we go again. And as I said here, they got smashed by the market maker. They got smashed multiple times, and they kept coming back, as I said, in channeling Macaulay Culkin in Home Alone there. Are you thirsty for more? Well, they sure were. So there was another profit opportunity and another profit opportunity right there. So it just kept coming. And finally, they seem to have woken up to themselves, and they've stopped adding reckless shorts. So where do we go from here? Well, interestingly enough, as I was saying there was around that 3K level, there is now a lot of liquidity of longs built up around that 3K. Is the market maker going to target that next? Interesting. Just remember that 3K level, and let's have a look at where the liquidity is now. And there it is. Look at that. I'll just put the cursor on it. 30.52. So that liquidity has moved up from 3,000 to 350. And that is more and more people taking long positions and moving up their stops up to that 3,050. Now, that is price chasing, of course. And so these people can get asking to have trouble if price reverses, because a lot of them will be over leveraged, under capitalized retail longs. All right, so keeping that 30-50 in mind, remember these charts that I've been adding to over the last few weeks, and have said the different ranges that Ethereum has been operating in. And as I said to you, all markets like to operate in ranges for most of the time. Well, let's have a look. That 30-50 that I was just saying to you is also a range top, and you can see there the wicks coming into it, and then it is eventually blown through. And where we're up to now, current price is 31.81 with a 24-hour high, Hapshoot 31.99 exactly. Coincidence? I don't think so. The market loves round numbers. That wasn't quite able to peak over 3,200. All right, so keeping in mind 30-50 should be the range bottom now, but what is the range top? Well, do you remember this chart that I've also had in the background for the last few weeks? And I said to you about each of these important tops of these wicks as potential resistance. So 29.66 was taken out, 30.40 was taken out, and now 31.83 has been taken out. Now, this is on the weekly chart, so we're high time frame. So 31.83 is a potential top for this new range. Well, going to the lower time frame of the 4-hourly, you can see that Ethereum has a, again, low time frame top happening here at around the 31.83, which is in confluence with the top of that wick I was talking to you about. So that is a low time frame confluence. But remembering that we've got to 31.99 with this spike here, this wick here earlier in the day. So technically 31.99 is the current range top, but not very far away from that 31.83. So where do we go from here? How do we trade it? And it can especially make you wonder how to trade it when you look at King Bitcoin, which dictates to the whole market what overall is going to happen. It's breaking out. This is again the 4-hourly. It's breaking out to the upside. So breaking out of its prior range. Will it come back into the prior range? Is it a deviation? Could be. 60,000 is on the horizon as well if it is a true breakout. How do we trade it given Bitcoin's amazing action in the last 24 hours? And I will reiterate at this point that this video is not financial advice, and I appreciate it if you would click the like and subscribe buttons and the notification bell to be notified of future videos. And as you can see about that bear trap video from last week, it's really important because you might have been caught if you weren't aware about it and think, oh, okay, it's time to short. And look what happened. Those shorts got their backsides handed to them. So anyway, one of the important things to do is to pay yourself, which I did when it hit that local top, the potential top of the range at 31.83. And you'll see here I had my stop set. So it just blew through that a little bit, which is totally fine. I don't mind. So 31.86, and I've paid myself, which you need to do regularly. And then straight after that, I placed my standard placeholder long. And it is now, because the kitty that I'm trading with here has grown, is up to 20 ETH. But again, you do you. I traded 100 times leverage, as you'll see here. You might trade at 2 times leverage and trade half an ETH, or you might have 200 ETH. You do you, what works for you. All right, so here's a word of caution before taking any positions. This is the ETH BTC chart. Now look at this. Remember we had this deviation here? Could this be another deviation? Is that 200 EMA? It could be, but this is different to this. Same, but different in the sense that this is because of BTC's strength, not because of Ethereum's weakness. This was Ethereum's weakness. Now, Ethereum is strong and getting stronger. You've got the Denkun upgrade, which I keep banging on about. That's the 18th of March that's coming up, and all the excitement building up over that. Just put the potential ETF to one side because I think that's really going to be a non-event, quite frankly, and Uncle Gary's going to knock that on the head while he's still got breath. That's my opinion. But anyway, that's a fair way away. Anyway, point is here, looking at what's happened here, this is simply a sign of Bitcoin strength when it has basically doubled Ethereum's percent increase in the last 24 hours. So what I'll be watching here is when it comes, if and when it comes back and touches this 200 EMA and how it reacts to it. Does it blow straight through, indicating another deviation? Unlikely, in my opinion. It's more likely to touch and bounce as Ethereum starts to pick up pace and catch up to Bitcoin and surpass Bitcoin in percentage terms. That is my opinion. So let's get down to the nitty gritty. How do we trade this? Well, to put it bluntly, let it ride, baby, let it ride. So I've got my placeholder long in place, and it's obviously price is continuing to the upside there, 31.95. Now, I will be looking to add, as always, in this bull market to my position. When do I add to my position? Really simple. And there is the simplicity of it. Look at that. As that, and you'll see that this is going to thicken up, and as price continues to move to the upside, this will follow it as well. And you can see another nice band appearing there as well. This is the 12-hour chart. I'm keeping it on a low time frame because this basically the shorts all got themselves wiped out, and so it's got to start from the start again. The amount of liquidity coming in from the short. So anyway, point is this is the longs here, and so they are chasing. But if price comes and chases it, the market maker decides, there's enough down there that I'm going to go after it, and down she comes. If it gets down to that 30.50, you better believe it that I'm going to be adding longs. If it gets down here to 30.80, I'm going to be adding longs. Now, just one thing here, and a little bit difficult to see, but up here, you've got shorts coming in. I don't know. They're not very bright, are they? And so they're deciding that 32.13 odd is a good level for them to place their shorts and donate more liquidity. I wouldn't do that if I were you. 33 to 3,500 is coming. As sure as night follows day. Might not be tomorrow. Could be. But if you're placing a short now, you're asking for it, as hundreds of millions, in fact, billions of dollars worth of shorts have in the last few weeks. So if you want to join them, go right ahead. Not me. I'm only long at the moment. So as I said, letting it ride. I'm going to watch this liquidation level like a hawk to see this thicken up over the next 24, 48 hours and see what happens. But anyway, 32.13 is a good one. 32.15, there's more there. So I'm going to let it ride and watch this. But if it thickens up, and I'll do another video tomorrow, if it thickens up as I expect it to do so, I'll be looking for these liquidity levels to get hit and set my stops accordingly. So currently 32.15, and you've got to laugh. And look at that, 32.30. So before I could set a stop, it just blew straight through. So let me just refresh this page for you, and let's see what happened then. All those, they didn't even get started. They didn't even get out of the gate. Their horse got nobbled before they even got out, and there they go. So all those shorts, they're gone again. So let's see what's going to happen. So as I said, let it ride, baby. Watch these liquidations. I'll be updating tomorrow, but in the meantime, 3,300 and 3,500 are high time frame. They're high time frame charts, that high time frame price levels that I will be. Yes, so going to the weekly chart here, I know it looks a bit messy, but just bear with me. And so these two candles here are my next natural point of liquidity, of imbalances, I should say, that I would expect to act as some sort of resistance, although resistances are not very strong at the moment. And so they're 3,500, 3,580 and 3,566. So that 3,580, there is a little bit there. You might not be able to see it, but it's there. So that would be my next point where I would expect some resistance. But at the moment, it's really trending. It's not ranging. As you saw there, it's broken out. You just can't say that it has established a range. There's too much volatility to the upside going on. So, and one other thing I will show you to reinforce that, and you don't often see this on my favorite chart. If you remember, these are these level 3 liquidation bubbles to say, hey, we're going to get a reversal shortly. This is my parabolic stop and reverse. These blue crosses here. So, okay, they're parabolic. Okay, that's fine. But you see how I've got none of these size 3 bubbles? Basically, there's no liquidity up there from the shorters to get grabbed. And as I said to you on the other chart, so again, at the moment, price is trending, not ranging. We're looking for a range high. We just got to let things settle down. So you choose when you go to take profit. my next take profit, given that I didn't have an opportunity to set that before price blew through it as I was making this video, will be at that the 35.81, the top of these 2 wicks here when these imbalance is. So that's 35.81 for the top, 30.50 for the bottom of a potential range. If it gets there, I am adding to my longs, you better believe it. So this is Old Bloke Crypto, very much enjoying these take profit opportunities in this bull phase that we're in. I hope you are too. Hope you're making lots of profits. Please comment on this video and on Twitter. Let us know how you're going, and I look forward to talking with you again tomorrow.